term, honestly, that I would believe that I feel it is, as you know, everyone has their own opinion to what different things are, but risk is, I believe it's based on your skill, your psychological level, and you know, the capital as well too. So you can have a person that can risk $50 from $100 account, and for them that's low risk, and someone else it may be high risk. You know, someone who's risking a $10 or just $1 because that's 1% of the account. So it's all based on, you know, your capital, your skill set, and where you are psychologically. All right. But let's get into the topic, right? So important forex profit notes you need to take on how to take signals, on what to follow. But sorry, this needs to zoom out. Give me a second. Hold on. I'm gonna just open this up as a PDF. All right, beautiful. Let me share my screen now. All right, awesome. So important forex profits note to take. All right. So in the beginning, I basically taught persons on, this is a lesson from the acceleration program. So what you're seeing here is just some notes that I had for them. So it's just in the beginning, I taught how to take, how to make a basic trading plan. We went over that, and how to take signals on what to follow. But this is a plan to follow if you want to trade your own trader there, and basically, you know, take your trading career seriously. It will normally take usually 1 to 10 days to go through the trading plan and find the right opportunity. However, the trade can last a day, days, weeks, or months. Now, you must go through, wait, let me just make sure everyone can see my screen. Everyone can see my screen, right? All right, good. I had a call that came through just now, but let's get to the important stuff. All right, I should be able to show my do the slideshow from here, so I don't have to have this big screen. Here we go, play. So have it put right here, follow your trading plan and your trades will go as planned according to what you prepared for. And I don't want that to go over your head, right? It's simple, like your business, right? If you, most of us don't make a business plan, and because we think we have a small business, and I tell most of my friends, you know, don't put the word small in front of your business. I don't even care if that's what it says on the paper. Your business is not small. Your business is as big as you make it. It may not have hundreds of employees, but you know, it's not a small business. And you know, because in our head we think it's a small business, we wouldn't go through the steps as planning it as we want it to be, right? And that's why a lot of our businesses don't grow, because we don't sit down and actually plan a 7-figure business. You know, you need to make that 7-figure business plan. So the same thing with your trading career. If you want to make I haven't made $1 million in trading yet. No, I made over 6 figures, but my trading plan is a $1 trillion trading plan. And, you know, as long as I make as close to that as possible within my lifetime, I'm happy. And that's how you need to plan your, you know, your trading career. So this essential elements will basically help you with sorry, someone's trying to join. Crap. How do I take this off? So I just need to remove the security where persons can just join without me having accepted. All right, here we go. That should be good. All right, cool. So yeah, like I was saying, you need to follow these steps as much as possible. And I promise you, this is not what you can just Google. And if it may be out there, but it's not going to be put together like this. So I just ask each of you to take notes. If you need me to slow down, just say it inside the chat box. I don't mind. All right. Also remember, market conditions change all the time, and you must be prepared to be flexible and adaptable, meaning you must be versatile when it comes to the market, all right? So the first pillar, fundamental analysis. This is 40% of your trading plan. Fundamental analysis is the study of the overall state of a certain economy. We also look at social and political news that could influence the currency. So the first step you want to do is verify the economic calendar. And by doing that, you go to a site like myfxbook.com or investing.com. You also have, what's the next site name? I don't remember the next site name. It was a common site. It was on babypips.com. When you first Google Forex and you don't want to spend money, the free course site you go to. But yeah, the two that I use and most of our students use is myfxbook and investing.com. All right. Second thing is you want to study and understand economic data. That is very important. Third thing, just basically, goes over again with a second instruction is, you got to read, analyze, and research at different news sites. So I use CNN a lot. I use FX Street, investing.com as well has a lot of headline news and some other stuff as well. And it's going to help you put together your fundamental idea, all right? You also have to understand the macroeconomics of the countries you're looking at. Meaning, if you're looking at GBP USD, you need to be looking at, all right, what is going on with GBP with the UK? What is going on in Europe? What is going on in the US? Who are they negotiating with certain deals with? What can affect certain things? Then number 5 is you want to create your fundamental idea from all of this, all right? It's not just opening up my FX book and looking at the economic calendar and you see red folder, orange folder. Nah, it's more to it than that. Now, for sure, some persons don't look at the fundamental analysis to get an idea of where to do their trade. And yeah, they may be profitable, but you want to be consistently profitable, right? So the 6th step is update your fundamental data every couple ideas when a major news event happens, all right? Always want to update it because you could have bullish bias for a pair like GBP USD, and something can come out tomorrow or 3 days from now, like in the middle of the week, and of course can shift it. Keeping in mind, of course, the middle of the week is midweek reversals. Now, let's look at the second pillar is market sentiment, 15% of your trading plan. And this is how financial institutions and retail traders positions themselves in the market. Now, I just want to, I'm going to touch upon that after this. I'm going to touch upon that after this. So the first thing is you want to understand why 90% of retail traders are losing their money in less than 90 days. Now, I know many people may think, oh, no one's going to lose all their money in 90 days. But there are many people that lose their money in 90 days. And, there's nothing to feel bad about. Everyone loses money when it comes to trading Forex. No one wins 100% of the time. Maybe 90% or 80%, but not 100% of the time. Loss is inevitable. Trading is a game of probability. So don't feel bad if you lose your money. Don't lose all your money, but that's what we're supposed to help you with. But let me see if anyone says something in the chat box right now. Good. Remember, if I'm going too fast or you need me to go over something, just feel free to ask it and I'll do it for you. The second thing is, what's the difference between a retail trader and an institutional trader? You need to understand this. This is super important. And I see that word institutional trader being misused a lot. And I mean, personally, I don't care, but, just you need to understand what it is so you don't get confused and have this thing in your head. You need to be an institutional trader to see profits. I'll just go over the definition of that after all of this. The third thing is you need to understand what's the relationship between retail traders and financial institutions. That is super important. I hope everyone screenshot this. If you're writing it down, let me know, just so I could know before switching to the next slide. Next thing is you need to understand, how does Forex work? What are the rules of the game? What is the basic, unchangeable mechanism of the market, all right? Super important for you to understand. How should you position it, and what differentiates a winner from a loser? And we have a quote on the right side of the screen: by risking 1%, I am indifferent to any individual trade. Keeping a risk small and constant is absolutely critical. Keep that in mind, all right? And there are a lot of new persons that come to trading, and just because this video is going to be reposted, a lot of persons going to be watching it, maybe one of you now as well too. Don't feel bad if you're making $1 a day or $10 a day, or maybe $10 a week or $10 a month. That is profit you're seeing that the bank is not doing to your money. I don't know about you all, but I know my bank account, they charge me for holding my money inside there, right? And when you withdraw it, and when you try, well, not if you sell it, but most times when you wire transfer it, you gotta pay as well. So you're being taxed for everything you do and just for holding your money, right? So $10 on your account every month is good. That is good, because I think they take about $10 or $20 a month, or $5. I'm not too sure, but don't feel bad if you're just making a profit. And if you're making a profit, that's good. You are profitable. You may not be as profitable as you want to be, but you're profitable if you're making $10 profit per month or per day or per week, whatever it is. So don't feel bad about that. I know many of you may be discouraged because you may be on social media and you may be seeing persons post up their lifestyle or their profits or other things, and it can cause most people to become discouraged. So don't feel bad for that. Let's go on to the third pillar, talking about price action, right? This is 10% of your trading plan. So price action is a trading technique that allows you to understand where the price wants to go by studying the candlesticks and chart patterns, all right? Super important. So how are the big financial institutions positioning themselves? That is something you want to get an understanding of. And you could tell based by looking at the candlesticks, looking at the price action, looking at certain moves. It's just all these things you'd be able to understand, all right? Then you could tell by, so let me just explain that a little bit. I won't go too in deep with that, but if like banks, right? They load thousands of lots and they don't do it all in one go, right? So they may drop like maybe 1,000 lots a day, or maybe like 500, or somewhere in between there. And then tomorrow they unload it again. So that's where you would see that pullback retracement, as we learned, will come in, and then they unload it again, and you see like a next huge dip. So you may be wondering why it's doing that. Then of course, the big financial institutions, what they have as well is certain algos. And when certain news hit, these algos activate, and that's what happens during NFP as well too. I mean, think about NFTs, it's crazy. But next thing is, what are the buyers and sellers doing? You can tell by looking at the candlesticks, looking at the wicks, right? Everyone should know what a wick is. Everyone should know what a pin bar is. Everyone should know what a bullish engulfing, a bearish engulfing. These things you can Google for free. You should know what this is. Even if you're coming from stocks or crypto, you're supposed to know what these candlesticks are, right? Japanese candlesticks, all right? So next thing is, what is the story behind the charts? Then we have, do we want to break or bounce? Meaning basically the element of structure. That's why I put it in brackets, so you could just get a better idea of what I mean by that. And then, should I wait for a candlestick confirmation? Meaning most times you may see on sorry, my lips. Most times you may see on a chart and the candle hasn't closed yet. And in your trading plan, you always wait for the candle close to tell, all right, is this a bearish variation? Is this a bullish variation? So ask yourself, should you wait for a candlestick confirmation to determine if your analysis is correct? All right. So all these things you want to take note of inside your trading plan. The fourth pillar, technical analysis. This is 25% of your trading plan. And technical analysis is finding the best price to enter the trade, to execute your fundamental idea and optimize your trade. That is super important, all right? So your technical analysis should support your fundamental idea, but don't just always depend on fundamentals, because sometimes there may be no fundamental news or no fundamental, nothing at all to basically, go based off of, right? And then that's when you just use your technical analysis. So that's where it comes to when I said in the beginning about being versatile, all right? So when it comes to technical analysis, basically we look the market structure, right? Support and resistance, accumulation, distribution, key levels, looking at the daily time frame or the 4-hour time frame, and psychological levels. All right. I know a lot of you that may have hopped on my call with the live training calls. You would hear me talk a lot about psychological levels, and you could YouTube that. All right, YouTube psychological levels. Also YouTube quarter points, very famous with GBP, JPY. All right. The next thing is market trend. Identification of the trend on the daily time frame, the 4-hour time frame, the 1-hour time frame. The bridge between the technical analysis and the fundamental analysis, super important, like I mentioned already. Your trend line, your counter trend line, key level trend line, your channel. Channel is when you draw, let's say we draw a bullish trend line going up, and then we just match it on the next side, creating a channel, all right, where you see where price is bouncing off of it. Then we have a counter channel, break, hook, go, big bounce, chart patterns, institutional trend, hard line, and Elliott waves. Now, I personally don't use that. I am aware of it, but I don't use it. The next one is the Fibonacci, all right? Levels of retracement and extension, impulsion and correction legs, entry and exit of your trade. That is super important. Take profit positioning, stop. Oh, let me see if someone said something. Sorry, I'm going too fast. All right. Stop loss positioning, Fibonacci confluence with elements of structure as well too. Am I going too fast? You can let me know if I'm going too fast. Shoot. Yeah, let's close this thing up. Here we go. Yeah, I'll post it on the Forex Profit YouTube, maybe next week. Yeah, next week I'll post it up on the YouTube. Let me just close this chat box out. All right, here we go. So going on to the next part of the technical analysis, you have your divergence, where it includes, using RSI, the MACD, moving averages. Then you also have your convergence versus your divergence as well. The importance of each section of the trading plan will vary with market conditions. Like I already said, you need to be versatile. The plan is not stiff. You should adjust it and adapt to it when conditions change. For example, there's nothing going on fundamentally, like I explained already, or it is very difficult to create a fundamental idea since the information you're reading is mixed. Solution: the fundamental section of your trading plan will be less important, and you should put more emphasis on the technical analysis. So now the fundamental idea, the fundamental part of your trading plan drops to 10%, and your technical analysis increases to 55%. All right. Let me know if I suck with math. I did calculate that before I did it, but that should be right. But this is also valid, the other way around, meaning if you have no technical idea, then with the fundamental. Personally, if I don't have a technical understanding of what's going on, I won't enter, because technical analysis gives you, your entry, So that's the end of this. Does anyone have any questions? Before you end the call, I'll just allow a person to unmute yourself. my bad. If you want to ask a question, feel free. So let me go back on it. So technical analysis is finding the best price to enter the trade to execute your fundamental idea and optimize your trade. Then you have fundamental analysis, what is now the study of the overall state of a certain economy. And we also look at the social and political news that could influence the currency or also the index, Let me know if you got that. All right. So assuming now that everyone got an understanding, I will be uploading it on the YouTube. And I hope all of you got value from this call. Appreciate everyone for tuning in. Take care.